Good morning, everyone, and thank you for once again joining us this morning with Your Voice, an open Q&A with me, Whitey. Thanks for your company, and we're really looking forward to our conversations today. But before we get into that, a couple of important things. Remember, hope you're sitting back on that lounge with your cup of coffee. My darling wife this morning has made me a thing called a tiramisu roulade. I don't know what a roulade is, but I think it's just a dumb word for roll. So anyhow. So I hope you're ready, relaxed. Good morning to you whilst we have a chat. And before we start that, a special thank you to all our sponsors. Without them, we can't do the things that we do. They give us great support. And most importantly, it means that everything we do in the FBAA when it comes to our professional development days and the like, we can do it free for our members and have done for many years. Big thanks to our sponsors. But let's get in today's Q&A. I want to welcome a man extraordinaire, the enigmatic mortgage broker, George Samios, the founder of Mad Home Loans. George, welcome. How are you, buddy?
I am very well, Peter, and thank you very much for having me on your show. Very honoured, and thank you very much. How you been?
Mate, absolute pleasure. And I love that plant you got in the background. Before, what did you do with your daughter? Your beautiful daughter was with us just before we started. You've sent her off, have you?
My wife and Grisella went downstairs and having a bit of a play in the backyard, mate.
Okay. Very good, very good. All right. Well, mate, thanks so much for joining us today. I think it's really important that we can share with the hundreds and hundreds of people that join us every week experiences across a wide sector of areas within our industry, and also particularly someone like yourself who's a really successful mortgage broker, and try and get some sneaky tips from you along the way. And I'll try and then we'll tackle some questions from our contributors, and we'll do that afterwards. But I think it'd be great to get a bit of understanding. Tell us a little bit about Mad Loans. When did it start? How, what some of the things it's done to create its brand presence and the like. So just a little bit of background on Mad.
Of course. So I started the business 8 years ago now, so January 2012. And gee, time has flown by. Started off with my first office in East Brisbane there. I was renting quite a small shop. And from there we grew to, now we have 2 shops. My main office in Seven Hills, and we've just opened up a second office in Aspley. We have a team of over a dozen team members, from Tony, who's been with me the longest, who's got over 35 years of commercial banking experience. He's my go-to for self-employed files. He's also my compliance manager, and he's also my bookkeeper. And then we've got, we've got some newbies who started this year. So I've got 3 interns. So I like to get interns now. We start them fresh and teach them the Mad process from start to beginning. And then we've got a few mortgage brokers as well. Nicole, who's been with me now for I think 3 or 4 years, and Costa. And then also we've got the financial planning. So about maybe 20 months ago, we ventured into financial planning. We called it Mad Life. So now that team is a team of 3, and we offer our clients financial planning in the terms of budgets, superannuation, insurances, investment bonds, and things like this. So it's we diversified, and I think it was probably one of the best things I did.
Yeah, mate, excellent. So how back in the day, how did you come up with the name Mad? I mean, it's got some whole host of really cool connotations you can have some fun with. As well as sort of go, so how did you connect that dot? Because I think for any brokerage firm, finding a name that defines them and their business is a really hard thing to do. Yeah.
I'm trying to find. I don't have it on me at the moment, but my company used to be called My Address Finance. Now, so for the first 2 years, the website was always madd.com.au. But as you can see, wrong side, sorry. So my address, Mad for short. I didn't have the balls to call it Mad from the start. It was finance. And then I would see customers a couple of years later, and they would say to me, "Oh, Mad George," and I would say, "You actually know what the company is called?" They would say Mad. I said, no, it's My Address Finance. So then I decided to rebrand completely and just go with Mad. Now, my mother actually was the person who thought of the name, Helen,
Okay.
who worked in the business for a long, pretty much, from day one as well, but she retired last year, which is fantastic. And so she thought of the name MAD, and it stands for basically making a difference daily.
Ah, very cool. Love it. But these are the things, and I think the journeys that business and people take, that take something that started here, but also developed to be that, and it's become, in my mind, an iconic brand, especially in the area in which we are up here in Brisbane, that is so recognisable. And you've had some personalities come along with that journey as well in the past. I don't know if they still do. They're a bit mad too, from my understanding.
You're probably talking about Mr. Vincenzo Sorrenti.
Bingo. Yeah.
He's still part of everything. He's actually a customer of mine, and so obviously he's our brand ambassador. He's still definitely very part of it. We did a lot of commercials with him. I'm not sure if you've seen them on our YouTube. They're pretty funny. He does a pretty good job, and
Very good, very good. And so, what are some of the lessons that you've learned over all these years in developing such a great brand and a great business that have led to your success to get you to where you are today? I mean, there's obviously, in any business, there are good times and bad times. You do some things really well, then you screw up on other things. That's a bit of life's journey sort of stuff. What are some of the things that you sort of go, yeah, that worked really well, that came good, that wasn't so good, scratch that one off the list? What are some of the highlights or headlines around some of that to help people who may be thinking, how do I create a brand? How do I create a business like this?
Let's start with the brand, eh? We're talking about the brand, and my brand looked like any other finance brand when I first started. It was My Address Finance or ABCD Finance or whatever everyone's company is. It's a pretty generic brand, but I decided to change that to 2020 or whatever it was. I did it. So don't be afraid if people out there who've got a brand and they don't feel that it reflects who they are and their business. Is your business, successful? You're doing things fantastic. You got really good tech. Your customer proposition is different to others, but your brand might look like a 1950s company, like My Address Finance or Pinnacle Finance, or a pretty standard finance company name. So there's no law against changing your business name. If you don't like it, get a marketing person and change it to whatever you want, and change the colours, change your website. If your website looks bad, you might be the world's best mortgage broker, but your website might look terrible. So even though you've been highly recommended from a friend, they'll go check you out on your Facebook, your Instagram, your LinkedIn, your website. And if it doesn't look, Gen Y, and they might go, look, I might go, these mad people look pretty good. I'll go through them, or because they're represented as a new company with, taking advantage of all that sort of stuff. So I think, firstly, don't be afraid of rebranding. Make sure your website looks really up and fresh, especially now where pretty much we're not even being able to see our customers. All our meetings have transformed from face-to-face to virtual. And on that, when I first started, what was one of the big learning lessons that I had, it was I used to drive to everyone's house. Now, I used to do that because I was actually, in fact, before a mortgage broker, a mobile lender for a bank. And that's what I was taught. I just thought that driving to someone's house was how you do business. But then I used to get some advice. I was really, in the early days, I would love getting advice from more successful mortgage brokers. And they would say to me, what are you doing, where you're at, what sort of volumes you're writing. And although I was doing good volumes, these people were doing double and triple me. And I would say, how on earth do you do that? And they say, well, what are you doing? I said, mate, I drive to customers' houses. They say, well, mate, number one, that's got to stop. I say, what do you mean? They say, what are you driving to people's houses for? You're discounting your service. He goes, you have an office? I said, yeah, but it's pretty small and ugly. He goes, well, mate, I've got an office. I've got a whiteboard, and they come to me, and we're in control, and we can show them our journey. And he goes, do you go to your lawyer's office? No. He goes, do you go to your accountant's? Does your lawyer drive to your house? Does your accountant drive to your house? He goes, why are you discounting your service? And ever since I did that, made a huge difference. So, they walk in our office, which we obviously got an architecturally designed to be like a real fun place. I'm not sure if anyone's ever seen the photos of the office, but it was designed by a Brisbane architect, Danny Zulo. Think Flight Centre, think Virgin, like it's just real cool areas, kids areas. I got Daytona machines in them. So when the parents come with, if it's teenage kids, we send them to Mad Zone. They got Daytona machines, Point Blank machines, Mortal Kombat. They got one of those claw machines. And if it's a kid, we have a kids section where they can draw and that sort of stuff. So we just try and keep everyone entertained. And we're in control. And that's not because I'm a control freak. It's just a better experience for the customer. As you can imagine, when COVID-19 came out, I can't do face-to-face meetings, and I've been doing them for 7 years. I never went to anyone's house for that long. And not that I'm now driving to their house, but now we've had to adapt to virtual meetings like this. And I think on that, all mortgage brokers, I've tested most of the video platforms out, and I found out that Teams, Microsoft Teams, if you're actually a paying member of Microsoft, you probably get Teams for free like me. And Teams is fantastic. You can actually, and if you haven't got a laptop which allows you to draw, like I've got a Surface Pro, and I think you're using an iPad. These are really good. So then, I'm very visual person, and I find most of my customers are as well. So when I do a Teams meeting, I share my screen, I pull up the whiteboard on my computer, and they can see, you just bought a property for 600 grand. This is the buying fees. And I go through it all, and then I email them the copy of the whiteboard later. And it's a sort of similar meeting to what would have been in the office anyway. And I'm in the meeting, my credit analyst who's helping me with that file's in the meeting, and then I have my clients in the meeting. So it's all recorded for compliance as well, especially now. Before they finish, yep, you're happy to proceed. Put up your driver's license. Yep, fantastic. Now put up your passport. Fantastic. And then you got to, obviously, when you get your loans these days, depending on the lender, you got to.
Well. Mate, I must admit, I have been to your office, and I got to say they are the most fun and coolest offices I've been in for a very, very long time. And I've kicked around many of them. So, yeah, well, the hats off to you, the way you've done your office layout and how you're running the business. And I guess, because one of the keys is always finding key staff to actually support you. It's one thing for you to get the brand right, to get the look and feel right, for George to be able to sell and do the business. But without a support staff, a team around you, you just can't run solo all the time. And you've got some great staff that are around you. Did it take you a while to find the right people, or was it you just attracted the right people by the look and feel, and you as a person, you sort of are able to draw them in?
I think that's a really, really good question. And yeah, I've gone through, a lot of staff in the early days, and and it's difficult to find good people. That's why you really, when you look at your business, you got to go, who am I? Who is Mad Loans? So my business is basically set upon a set of core values, which is my business. And when I employ people, I make sure that those core values are instilled in those people. Things like always doing the right thing, ultimate customer service. So, anyway, so whatever my core values are, I make sure that the staff have those core values as well. And my office is not only for my clients to enjoy, but I want my staff to have a good work environment as well. So, I think having a cool office, having a principal core values, and having the ability to get people, like, I'll give you one example of one staff member, Chris. Chris started with me when he was 20, and now he's probably 20. I'm gonna say 23 or something, right? And when he first started, we sat down and I worked out what he wanted. Now this guy is an accountant by trade, and one of the other guys, Costa, is a lawyer by trade. So they didn't really know what they wanted to do, and they came to me for advice about, George, I know you from the community. I'm wondering what I should do with my life. And I saw something in them, and I put them both on at the same time, those blokes. Now, fast forward, 2 or 3 years, they've both bought their first house, and they both bought good properties. Costa is now a mortgage broker, and Chris is now a financial planner. So these guys came from zero experience to some of the best staff we've got, really, really good kids. And so it shows, other staff like Nicole, who's also very, very good. She used to work from a bank. I used to see her all the time when I'd go into Carindale, and that's how I got her. Tia is a family friend. So I sort of tend to hire people that I semi-know, and I haven't really gone outside of that circle. And I don't really mind if they have no experience. That doesn't bother me. Having experience sometimes means I've got bad habits.
Yeah, it's excellent. I just got a text message whilst you were speaking. I think my state manager up here is feeling a bit skittish, going, "Oi, I'm good people too." You probably know who I'm speaking about. So that's all right. We'll keep them all on their toes. And the other interesting thing too is how you've transitioned the business to being minimal face-to-face, like going to people's stores. Now, my first brokerage was in the 80s, and although it was the latter part of the 80s, and everything was banging on doors. And then when I started in the banking sphere, my first, after I sold that business, I went back to Sydney and went into banking with Advanced Bank, and I was on the fast track lending team, all knocking on doors. And and then I went into the Rams business, set up their first sales office. All of it was about banging on doors. And I think that ability to transition your business to, whether it be virtual as at the moment, or they come to your office, so they come to you, so you control the environment. You basically control the sale, right, and how that plays out, and allow people to experience what your journey is. I think it's magnificent.
And that comes with confidence, because 100% of my clients are referrals from existing clients. So I don't know if there's still a conception out there that people think they need to go become best friends with lawyers, financial planners, accountants, real estate agents. I mean, to me, I learned in the first couple of years, that's not how I want to conduct business. I learned that if you get one customer and if you treat them so well and you do such a good job, you will get 5 more from that person. And when you get referred, when someone is referred to you, they have every intention of using you unless you do a bad job or show otherwise. So they've been referred. They're going to check you out on the internet. Yep, this person seems to be pretty good. They seem to be pretty proactive. Their website's up to date. They seem to be doing videos every month, giving everyone free information about stuff. They're proactive. They're trying to get business. And I've heard a good thing about this person, so I'm going to give them a crack. So when they ring you, they're going to follow your process if you're very polite about it. So I've got one lady, Tia, who is our director of first impressions, and she gets 4 leads to her. People sometimes SMS me. I'm happy to speak quickly. Hey, thanks for the opportunity. I would love to work with you. Now I'm in a meeting. It starts in 2 minutes. What I'm going to do is I'm going to pass you on to Tia. She's going to gather all your information, book a virtual meeting with myself. You send out a fact find. This enables me to know pretty much everything about you before the meeting. So I'm well prepared, and I know if I have any questions about things, I can ask it then, rather than, have a better outcome for you for this meeting. And they go, yep, no worries at all. Bang, goes to Tia. Hey, Tia, it's going to take about 15 minutes. So that's just my process. That's just the way it is.
And it's funny because here I just got a text from a gentleman named Michael saying, one thing that has always impressed me about George is that he expects 5 referrals from each customer. Please, can you tell us how you achieve that? Which, unprompted, you basically did. But I guess one of the keys to it is the experience, is how you get those referrals. The experience that person has just says, they're great people. You need to go speak to them.
I've never asked for a referral. I've never asked for a referral. I don't say, hey, could you refer me to your friends and family? It's just, you do such a good job that, like if you go to a really good restaurant, are you going to go tell 10 people about that? Say, mate, that's the best ribs in Brisbane. That's the kind of person I am. Now, not everyone's going to refer you, but I mean, a lot of people do, because if someone has a really good experience, they're going to tell everyone about it. That's just the way it is.
Yeah. And obviously where you are today and opening up other offices is testament to the success of that recipe. Mate, when you said you opened an office again recently, a second office, how long ago was that?
So it's literally just been renovated. So obviously because of COVID-19, I can't actually, no one can be in there.
Well, this is where I was going, is how you were going with all the current environment.
Yeah, so they're there. You probably can't really see this because of, but that's basically like, so it's a little bit, it's very similar to the other side of the office. It's a lot smaller, but what I saw a bit of a gap in the market on the north side. So I have a lot of north side clients, and them traveling over to the south side. They did it, but I think we can go there and really work on the north side a bit more.
I think Brisbane has its own local colloquialism between north of the river and south of the river, and they tend to have a little bit of tension between the two.
100%, 100%. And my intention with that office is, if that office becomes a $100 million brokerage in a year or two, then I'll have the confidence that my recipe does work for this business, and then I'll look at expanding it. That's the truth to what happened with Aspley.
Yeah, mate, that's great, and it's to me, it's such an encouragement that you're prepared. And I guess you started this before it happened, but even through the COVID period, that doesn't seem to have dampened your enthusiasm and expectation as to where that second office is going to take you and what that future still look like. Because at the moment, there's a lot of I was going to say negativity. It's not the right word, but there's it's like a cushion on everything at the moment. Oh, COVID-19, when are we going to get out of it? And I was on a Zoom meeting yesterday with the federal small business minister, Michaelia Cash, and talking about timings of coming out of this. And so it's a great testament to yourself, your business, and your belief in yourself and your business to still be encouraged to continue and push those steps forward without sort of going, oh, I have to sit here and watch and see for a little while. It sounds like the only thing that's holding you back is you can't walk in the door and run the office as such for the moment.
Exactly. And I think in life, you are a sum of your experiences. When I first finished school was the GFC, and I went in, I didn't like uni. I was a dropout, and I went into work in real estate. And I remember, some of the first sales meeting, we were staging at West End. I remember that my boss at the time had a copy of the Courier Mail, and he slammed it in the sales meeting. And there's a picture of a house with a red arrow going down. And he goes, if you can survive this, you'll be an agent. In good times, you'll be the best real estate agent. And so I started my career off in a GFC where people were freaking out to sell and people were losing money. And then when I went to work in the bank a few years later, I remember valuation used to come in so low on all, poor people who bought off the plant in Hamilton. I would have to tell them, sorry, mate, you signed a contract 880. I got a bank bail of 740. And so it was all negative, and then it started getting better. So I never really knew what a good market was until when it happened.
Mate, can I just capture that too? And although it's not a question, I think it's an important thing to have a chat around. And firstly, thanks for making me feel so old. You cut your teeth during the GFC. I remember the GFC vividly at some of the peaks of my career. Thanks for that. But a lot of the questions we've been getting from people and we've answered in the past weeks have sort of been, how do we cope through this? What happens if the real estate market flattens out? As you're saying that you bought a property for 880, it's now worth 7 something. And the issues that come out the back of that. What were some of the experiences or the exampling of how things managed their way through and out of that period? Because the run up to the GFC, so if I go back to, let's say the late 90s and through to 2008, it's like you could blink and become a millionaire in this game. Like the market was just running so hot, it was crazy. And it actually burst through what should have been its normal cycling for a recession. And so it wound up with this extraordinary high and had this serious drop. How did you go? What were some of the things that you experienced for that? How did that play out for you in those early days when you're a young guy getting into your career and you walk into that, you'd be going, oh shit, what's happened here?
It was really hard. I remember, I worked for one bank, and as we all know as a broker, now, one bank may value a property at something, but another bank will value it differently. And some banks can do guarantor loans and some don't. And at the bank I particularly worked at, unfortunately it would be the bearer of bad news, but I very quickly became friends with a mortgage broker. And I used to refer him those loans, and he would actually find a solution. So I think we're pretty well positioned being in doing what we do as a mortgage broker. We more often than not find a solution for the customers. And if we can't find a solution hand on heart, then most likely a solution isn't possible in terms of financing this property. So things like, I remember I couldn't do the deal because it got valued so bad. I referred him to the broker, and he ended up doing a guarantor loan to help them settle that property. Otherwise, they would have lost it. And I actually did one recently. They bought off the plan in West End. It got undervalued, and I did a guarantor loan to help get it across the line. So, I mean, that's something which helps out with those ones. But I mean, you've got to be lucky enough to have an eligible guarantor who's willing to help you. Otherwise, buying off the plan always has had its risk. But yeah, it's interesting to see. Although I haven't seen any drops in valuations yet, I think it's probably a matter of time once all these loan freezes come up. I mean, that's just my opinion. I haven't seen nothing happen yet. People are still buying it. In fact, I'm actually been busier than ever. And but I think once these loan freezes come up, and if unemployment does reach where they're saying it's going to reach, I think people, will go, what's the point of having this investment property? I don't need it. It's going to cause me too much stress. And I think you'll see a lot of property on the market. And if there's too much property on the market, then there's an oversupply and not enough demand. And that's when prices, in essence, potentially could drop.
Mate, thank you. You've just answered one of the questions that are on my list here, so I'll skip that one. But thanks for that. But it is interesting to see that, the view of the world of how these things may cycle, the fact you're still busy, still writing loans, you're not seeing any property values drop. And movement in property values, I think everybody has to understand, is different horses for different courses. So not everything moves at the same pace or at the same direction. And it's one of those things you've got to look at your own specific marketplace and understand that well, which obviously you do. And so I guess everyone who's listening in on this is a broker. I guess that's an important thing, is you really got to be connected to your market, and maybe even disconnect slightly from the more global chatter. You get economists with overarching statements saying property values are going to drop 10%. Well, they might somewhere, but they might not here. So you've really got to connect to your environment, to your local marketplace in a really strong way, and understand it really well. And so yeah, I'm hearing that over there, but the reality here is this. And without that, I think it's hard, in my mind, it would be hard to navigate your business through all this.
I definitely agree. And definitely I'm getting more questions now from first-home buyers who I deal with a lot. George, if I buy now, is the property going to drop in value? And I say, look, in fact, it could. I don't have a crystal ball. Otherwise, if I knew when it was going to go up, I'd buy. And if I knew when it was going to drop, I wouldn't buy.
I'd sell.
I'd sell, sorry. But I said, listen, I want you to think the next 10 years. I said, you guys are just starting off your family. Don't think about buying and flipping a house, which you're not doing anyway. But think about in 10 years. To make sure you try and buy a house on a good street, in a good suburb, that you're going to be comfortable with. Because, if it does drop, it doesn't really matter because you're not going to sell. And no matter what the market is, you'll always have a good house on a good street, I suppose. So, but no one can really say for sure if the market's going to go down or up. It's like when people ask me, hey, if I fix, is the rate's going to go lower? Well, I say, I can't. All I can tell you for sure, though, is if we do fix, you're going to be saving this much money, and this is the ramifications, but it's ultimately up to you to make your decision. But because none of us have I fixed one of my loans in at 3.99%. I feel a bit stupid doing that. But I thought that was cheap as. And now obviously we're getting half that, which is unbelievable. So interesting times.
Yeah, it certainly is. And but again, that comes down to that experience. And the reality is, with property, it's a bit like with shares. You've got to play a long game. Sometimes you might make short-term gains, but the reality is the market moves around. The general trend in property goes north, but it's over a period of time. And sometimes you hit like periods now, a bit like the GFC, that actually pulls everything down and starts to become a bit more of a buyer's market. I always thought this COVID period, if properties did come back slightly, and although they're not necessarily where you are, but in other places, it may bring first home buyers into the marketplace who just didn't quite have enough deposit. Now all of a sudden, if the price has pulled back a little bit, yeah, maybe that does bring some more people into the marketplace. Hey, I've got a question just come through for me. We'll ask you this one. What are some of the biggest mistakes that that George see that he knew brokers make? Oh, that you see that brokers are making. What are the biggest mistakes you see that brokers are making, or things that old brokers are doing that limit them? You may or may not see that. So what are the biggest mistakes you see brokers saying? And I don't know about this older brokers things. Again, this is the second backhander at me this morning. What's things that limit them? And to me, for the older guys, it's what you were talking about with technology before. If your website's out of date, not schmick, not reaching the demographic or the target market you're after, it's partly you've sort of tripped over at the wire.
Look, let me, I'm just going to speak what comes off the top of my mind. I try to make the experience of my customers as easy as possible. I will fill out all the paperwork. I'll tick all the boxes for you. I will over communicate to you. I'll speak to you. All my staff are trained to call my clients every couple of days with an update. I don't want you to ever have to ring me. I want to over communicate to you. I want the process to be unbelievable. I want you, when the process is finished, for the customers to go, the shit, that guy is actually pretty good, next level, very passionate. I mean, to the extent of, become a CDEC for $300, become a Commissioner of Declarations or a JP. Why? When you sign your customers up, I mean, what a pain in the ass it would be to get a Commissioner of the Declarations every time. I mean, that's just.
And for those in other states, a JP,
yeah,
Commissioner of Declarations is a Queensland thing, but yeah. But so people say, justice to the peace. Yeah.
So, I mean, that's just an easy one. Why make you? I want to do all my sign-ups. I want to go through it all. Thank you. Happy. Yep. And then we sign it. And then if you haven't, now I want even a refinance. I want to happen fast. So we use Careers Please. I pay $7.70, and a courier comes to my house every day and picks up loan docs, and it gets delivered the same day back to the bank. I don't use the return envelopes from the bank because I want everything to happen quick. Yeah, I want it all happen yesterday. I don't want to wait. I want the process fast, quick, and easy. And I've created a process which enables that, and continuously improving that every 6 months with a business coach to try and work out how can I make my process easier and faster. Like I use on technology, right? I use Teams for meetings. I use File Invite to get customers' documents, which is all branded MAD. I think you can hear the baby in the background. He's playing outside. Right. So File Invite, which is all branded MAD loans, for them to drag and upload their documents. We use bankstatements.com to get the most recent 6 months home loan statements, transaction accounts, credit cards, and it helps us verify their living expenses or see if there's bad conduct. DocuSign for signing CPDs, and some banks allow you to do it, like NAB allows you to do it. DocuSign. Have a good CRM. I mean, so I'm with Connective, and I find them very good. I do know that other aggregators have caught up now, I've heard, and are doing some pretty cool things with tech. And I think that made a big difference for us. I mean, I'm lucky I started with them. And they've always updating, and now they have so many.
Excuse me. Sorry, mate. There you go.
Now, I'm not only using Connective as CRM. I'm also using a company called Active Campaign, and they plug into Mercury, which is Connective CRM, and that sort of, to give you an idea what sort of things are happening. When I book a meeting, or when my staff book it, they get SMS, a appointment date, time, calendar app, invitation, that's fine. They get a video from me saying, hi, welcome to MAD. Thank you for the opportunity to look at your finance, and a bit of a rundown about what we do and what we're trying to achieve here. But every single status change, submitted, unconditional, documents issued, documents packed, settlement booked, settlement 3 months after settlement, 6 months after settlement, you name it, I've got automations happening, video, SMSs, emails. Like, for example, if you get a pre-approval with MAD Loans, you're going to get a congratulations, you're pre-approved SMS, email. In the email, you're going to have a video which says happy house hunting, your pre-approval last months. Remember, download the Mad Loans app, which the free property reports on. And then after 3 days, it is an email from me saying, "Hi, First Name. Just thought this would be interesting for you to watch this video. Hope your house hunting's going well." And it's an automated email, but it's a video of how offset accounts work. And then plus 5 days, they get another one saying, "Hi, First Name. I did have this video, and I think you might be good to have a look at. And it's a video I did on houses versus units." And then once it's coming up to 3 months, and if that status hasn't changed, minus 2 weeks, they get an email saying your pre-approval expires in 2 weeks. Then when it gets to 1 week, we get notified, and my staff ring them up, "Hey, your pre-approval is expiring in a week. I want to book a virtual meeting with George." So I hope everyone just followed me then. But I mean, the technology these days really allows you to, whatever you can think of, you can run your business like that. And imagine trying to get a staff member or members to try and do all that stuff without making mistakes. It's not really possible. Try it. Better off investing in a good CRM and working with companies like ActiveCampaign and spending a couple of weeks mastering what you want to see and then implementing it. And then you never have to worry about it again. Finished.
Mate, yeah, brilliant. And I also love the piece where every 6 months you're getting a business coach come in and looking at the business and working with them and looking at other ways to improve what you're doing. I think that's a really good thing. Although I've got a whole lot of questions that have already been said to us, I'm getting quite a few questions this week to ask you specifics. So I'm going to catch a couple of those on the way through. And one of them from Rob, a two-part question is, do you send gifts to your clients at settlement, like a settlement gift, and potentially to clients that refer you loans? Do you send them any sort of gifts, or what do you do there? Anything?
I usually give, when a customer comes and sees me in the office and they come on board as a customer, and when I'm shaking their hand when they leave, I usually give them a couple of Mad umbrellas. And if they've got kids, I'll give them some Mad fidget spinners, Mad balloons, a Mad bag, Mad hats. I've got heaps of Mad merchandise from China. But since COVID-19, I've been scared to make my order, so I've run out of umbrellas. And since I've been home, so my wife has a machine which can laser print things. So I just went to I just order online from IKEA, and I got these. This is like a pretty similar color to our color. So, and then we get their name, he prints it on a sticker and puts their name there. So when they come sign their loan docs, I give them a couple of water bottles. That's all I can give. And if someone refers me, it's every week I find out where the loans came from. And yeah, if I do get referrals, I'm not like 100% always do this, but if I see a couple of referrals from the same person, I might say to Tia, "Hey, send them some gold class tickets or something." But I don't have like an actual process, which I 100%. I always like to and say, "Hey, thanks for referring me to your friend Bob. Really appreciate it, mate." I do like to ring up and say that, and they say, "Oh, no, had no hesitation, whatever." But I think people appreciate the phone call, and thanking for the referral is probably what we need to do.
Excellent. And a bit more of a technical question. When you're talking about how much you help the client, whatever needs to be done, you help there, we help the client get things through and so on. How do you deal with any of the compliance issues if you're filling out some stuff for the client before they've signed it? What's your compliance rigor around that to make sure it's all good and they agree to what's there?
Well, usually we're in the meeting together. So if I'm printing out like an onboarding form,
face to face,
I'm not going to give them the form to fill it out. I'm going to go, "Hey, how many offset accounts do you want? What sort of credit card limit would you want? You want online banking or paper statements, or and I go do it for them in that regard."
Yeah. So, do you record your meetings or have somebody else with you when you're doing them? Is it just you with the borrower? What's that mix?
No, so every time I do any meeting, I have one credit analyst with me. So I'm probably a little bit different to a lot of the brokers where we've got a dozen staff, and so I've got about 5 or 6 credit analysts. So I'm the broker, I'm in the meeting, but there's always one credit analyst with me, and they'll be assigned that file. They're taking file notes, and like at the moment I'll be doing a meeting. And my last meeting was with Kathy. And I said, "Kathy," so we went through which banks, we did a comparison with ANZ, Combank, and they were with Westpac. And anyway, so I went through. We found out that CBA was going to be the best option for them. She loves multiple offsets, and so it really worked for her. So the whole thing is recorded at the moment, like this, and we go through and do a bit of a to-do list. So Kathy, can you make sure you please order a val on that property and do pricing for these loans with I want this one to do fixed, this one variable as per the meeting.
Yeah.
And go ahead and get all that stuff done for me, and then prepare paperwork for sending and that sort of stuff.
Fantastic. I better tackle some of the questions that were sent in advance, otherwise I'll get into trouble. So an interesting one. What do you think we will be able to continue to do without the requirement of a physical face-to-face meetings post-COVID? So do you think digital meetings will continue in the future? How do you see that physical face-to-face piece?
Yeah, I think people will ring up. And this is a choice by me. I was fully against virtual meetings before. I wanted to see them face-to-face. Now we were forced to do this. And I'm finding that I'm having the same conversion rates. I'm still getting my connection with the people. They're still understanding everything 100%. I still have my whiteboard. It's actually recorded, which is way better for compliance, which never used to be.
So you think lenders will back a continue, because for so long, it's one of my pet hates in this industry for decades now has been, there was an entity set up, and one of their key missions as an industry group was to get to the point of a common application form, a standard application form between the lenders. To me today, I really get over why don't we have standardized application forms? What about standardized discharge forms, Privacy Act forms? There's really, in my mind, after what is now my 42nd year in this industry, why those things can't be standardized. There's a little bit of ego this way, a little bit of ego that way, and lawyers in the middle trying to justify their fees. That's really annoying. So with this face-to-face piece or the digital piece, we've been pushed into doing digital meetings as such, and lenders, and I don't know the complete pieces, but I think most lenders are accepting of that now. Would that be right, George?
Yeah, look, and I'll talk on behalf of some of the biggest banks in Australia. They're now they've changed their onboarding form, and it says I probably have one literally sitting around here right now. Yeah, so it literally says broker disclosure. Where I personally conducted a face-to-face interview, identify the borrower. So where I did not conduct a face-to-face interview, I personally conducted an interview via video conferencing. So you've got to tick that box. And then you've got to say why. And I always just put COVID-19. I just put that in the box. And because that's what it is. People are uncomfortable seeing each other face-to-face. So some of the major banks in Australia had to change. Now, in terms of identification, back before, if you wanted to do something like this, they would need to go into a branch and be identified, or get a JP to certify their ID and then email it to us, or go to Australia Post. Now, if you have a video like this, all they have to do for that particular bank is put a driver's license up, and you screenshot it, and then put a passport up, and then screenshot it, and then that's now that to me is beautiful. It's a lot less effort. Can they go back? I'm not sure. I hope they keep it like that, because it's a good way of doing business. And I think the opportunity is even bigger for us mortgage brokers now.
Yeah, to me, and this question's come from Andrew, I see that there's a whole host of things that we create new norms out the back end of it. So things become a new normal. And I would like to think that the ability to continue without the requirement of physical face-to-face meetings, doing the things as you're describing, would continue on and really be a part of our future's normal way of conducting business if you chose to do it that way.
Look at so many other industries. I mean, my mate's got a fish and chip shop. The guy's doing 99.99% takeaway or delivery because of obvious reasons, right? And the guy's up like 50% sales. I know a lot of restaurants are suffering, and I feel for them. But some businesses who are making a huge adjustment to try and really drum up delivery services and takeaway are killing it. And that's because everyone's and that's just people just like watching at home. I mean, look at Netflix versus Blockbuster. Look at all these different things. People just are more comfortable at home. So why do we have to force them to come to our office? I won't be forcing customers. If they want to come see me, come. If you want to do it virtual, I'll do it virtual. It doesn't bother me.
No, cool. An extension of that, and part of this has come from Bill. What's your view of life after the COVID-19, and what do you see as our biggest challenges? We've talked a lot about life after, but what do you think some of the biggest challenges will be for brokers once we come out of this?
What's the biggest challenges for a broker? That's a bit of a hard one. I mean, I'm pretty optimistic. I don't think. I mean, it's got to make sure if you aren't reviewing your clients annually, make sure you start doing that. I think there's so many options now, and if look how easy it is to do a meeting online, and it just takes everyone else to figure that out, and people go, you know what, I can touch base with this broker, have a 20-minute conversation, and work out if I'm on the best rates or not. So you really make sure you add value to your clients, otherwise they'll leave you. Now, I spend about half my day speaking to existing customers, repricing their loans, revaluing their properties, making sure the bank isn't doing the wrong thing. Now, that's very important. That often becomes more business anyway. Again, I review them. They remember me. The next time they're at a barbecue, they're going to say, someone's going to mention they need a broker. They're going to say, yeah, I spoke to mine. The guy I was paying 3.4. He dropped it to 2.95 like that. And, so he's on it. You've got to keep on your clients, otherwise they'll leave.
Yeah. And a question from Nick was, have you got any tips around how to deal with the longer SLEs or SLAs, the turnaround times that most of the banks are pushing out at the moment? So they've gotten, and I know why some of the issues, but some of the issues you can't change, but at the same time, you've got to manage client expectations. How do you manage that? 'Cause that could be a real tough gig at the moment.
So let's use some of the major banks who are currently doing the 4K cash rebates. They're the ones who have obviously got huge SLAs. And so if you're refinancing a client to that bank to get the 4K plus really, really good interest rates, set the expectation. Listen, we're a refinance, so obviously the priority isn't that high. And so the bank's turnaround time is 3 weeks. I'm just going to set that expectation now so you don't call me every day. We'll literally, I'm going to do an upfront val. It's all works. We've done the servicing. I've gone through everything. There shouldn't be an issue here, but it will take 3 weeks to be approved. But just setting that expectation. Now, if they want to buy a property, and why would you be taking them to a bank which takes 3 weeks to be approved? If you, especially in these times, imagine putting subject to 21 days. I prefer to go deal with a bank that can get it done in a week. And so I say, listen, this bank, you're with them, but I can get the same rate with this other bank, and potentially a better product, but in a turnaround time within a week. So I'd recommend, if you want to buy a property, have a think about, really, do I want to go to a bank which is going to take 3 weeks to get approved, or do I want to go to a bank that's going to do it in a week? And just tell them the SLAs, because when you select a lender, it's not all about product. It's also about, do you want to be waiting 3 weeks and on the last day of finance then you're approved? I personally.
It's a very big point, in discussions I've had with our regulators when we're talking about best interest duty. It's not just about price. And it was some of the examplings actually came out in a past report that ASIC put out a few years ago. But when you're looking at what is, in today's terminology, the best interests of a client, if you are buying a property, you can't wait. And some banks are doing 32, 34-day SLAs at the moment. Who can wait 3-4 weeks when you're on a time, you've got a 4-week settlement clause, and you may or may not have a time of the essence period after that. You actually need things done a lot quicker. And if you are buying, there are priorities in that. You've got deposits, you've got fees to pay, stamp duties, all this other stuff. So you can't just focus on rate. And I think it's an important discussion that everybody needs to make sure they have, is the expectations of the clients and their needs for settlement, and especially if it's a purchase. That's an obvious big one. Refinances, I guess the pressure's off a little bit, but at the same token, set the expectation up front, and I guess work backwards on the decision-making process to guide the client in the right direction. Sound fair?
Setting the expectation.
Yeah. So those SLAs are painful at the moment, that's for sure. How do you go when dealing with lenders who change their policy before you submit a loan, and and when you get to credit to confirm an expectation, they then get declined. So the rules change on the way through. Do you see much of that? And you tend to see this in, like, if you think back in times of GFCs and times like now, credit policies move, and sometimes they move really quick. So you could have a discussion with the client, set an expectation, put a submission in, and all of a sudden you find, especially with timeframes up to 32, 34, or 21 days turnaround times, they're going, geez, the whole world can change in that. COVID-19 did.
Definitely. I actually had one. I was with a bank, and the guy's building, and I had like an indicative approval, and then the bank changed the policy. I'm very lucky that I managed to mitigate the risk after speaking with the client and the client's accountant, and we went back, and long story short, I managed to still get that one through, which is awesome. But look, it can happen. And like, let's say, for example, I think NAB officially stopped using holiday rental. I don't want to quote banks and policy, but let's just say a bank may say, hey, we're going to stop using rental income. We used to be 80%, now it's 70%. Guys, we can't help these things. And that's why you've got to be really upfront with your clients and say, listen, this just happened, which should now affect your application. But like I'm a broker, and another bank is doing it differently. So to achieve your result, your required purchase amount, I think we should, maybe swap banks. And have I had to do that yet? No. Will it have to happen soon? Potentially, as policy change. Like, I mean, I don't know if this is a fact or not, but I've heard if you're in hospitality, tourism, gym, or beauty, LMI is difficult. I actually found out one yesterday. I had a pre-approval, and the guy is buying a property today, and with another major bank, and they dropped their Medico waiver from 90 to 85% LMI. So that's a new one. So things are changing pretty quickly. But because the guy is currently pre-approved, the bank will still honour the 90% no LMI waiver. But the BDM told me, hey, for new deals, it's only 85%. So it's just, you've got to be attending PD days and speaking to your BDMs regularly and watching out for those bulletins when they come out. Just keep your finger on the pulse of what's happening.
Yeah. I've got a couple of other questions to come in, and I'll probably bundle this two together, and I'll answer the first bit. I'll leave you with the second bit. It's around best interest duty. So the question is basically from Karen saying, will best interest duty come into play this year still? Now, I know from a regulatory position, and this is conversations within the last, the back end of last week, Treasury and ASIC are still finalising the regulatory guide. I expect the regulatory guide will be out in May. They are both waiting for government, and that's Treasury basically, and so are ourselves, waiting for guidance for them to say, is implementation July as originally planned, or is it going to be pushed back? Now, multiple industries, all the associations said push it back. We've sort of tagged 12 months would be best and given justifications for that. But the government is also, and we'll get more on this tomorrow when the government makes their update announcement on easing restrictions. But government originally was expecting business back to normal to be in September, all things being good. That's been revised to being July, business back to normal, and that is probably a staggered implementation as well. And then what is normal, and none of us know that yet until we hear more. And they have plans that if things play out the back end as well, that will have further stimulus and options that sit in that. But the problem is, it's such a moving beast. To answer the bid question, I expect, to answer it now, I would expect that one, the RGs will be out, then we'll do a whole raft of training, because any training before that is subject to finalisation of the regulatory guide. Right? Then we get the training done, and then whether, hopefully it gets pushed back to the end of this year, or more likely the beginning of next year. I don't think we'll get 12 months. You've got to shoot high and let the arrow fall closer to where you want. But if we can get it pushed back the end of the year, early next year, I think that's a fair outcome to enable all of us in this industry to finish off our dealings with COVID-19 and how we come out the back of that. And for some people are doing it tough. Some people like yourselves are doing really good, but we need to balance it out and make sure the education piece is right. Have you been doing anything yourself, George, to prepared for the best interest duty, or you're waiting for the next step to happen and then slam into it? What have you been doing?
Well, see, because I became a financial planner, and we, we do some pretty serious statement of positions. Sorry, not statement of position. I'm talking about mortgage broker. Sorry. So you literally need to really document how you got to the product and why and all that stuff. We almost do mini ones at the moment. It's a bit of a grey area, but we really want to document the client's objectives. So I always start the meeting with, hey, what's your number one objective? Like, what are you trying to achieve here? I want a cheaper rate. What else? I want to renovate. What else? I want to pay my loan off faster. So I make sure that I get the objectives, and when I do my solution, we reduce their loan term, or we show them what happens if we did, and we show them the benefit of swapping banks and all the associated fees, and we really document everything. And then we go through banks, and like my last meeting, she had all her banking with one bank, but her loans with other. And I said, why? She goes, well, I like to have all my multiple accounts. And so I know offset account is cool, but I don't want to have an offset account. I want to have multiple. I said, what if you had unlimited offset accounts? She goes, what do you mean? I said, well, some banks do. So you really go through the products, that are suitable for the client, and you just got to demonstrate what the objectives are, what you're going to do to get them, and the benefit associated with it. A couple of different lender options. Go through. This is this bank, your bank, and another bank. This is the different products, fees, and rates, and we make a decision together. Obviously, sign off on that document. I think I wish there was a universal one, which, hey, everyone, just do it like this. But unfortunately, I don't think it's going to be that easy. I think we're going to have to create our own a little bit. But if you build it into a process, I mean, I just do it automatically now anyway. And it's just part of the meeting. And then it's just about documenting. I reckon most brokers are doing it, but it's just documenting it. That's all.
Yeah, well, and that is one of the keys. When you speak to all the regulators, their key to compliance to a best interest duty is your record keeping, your documentation to prove how and why you came to the decision that was put forward to the clients, or what those options were, and why the client made the decision they made. That documentation piece is key. And of course, the FBAA will be doing an enormous amount of training for people and giving you a lot of support, documentations, guidance, and so on, and guidance on the guide. Once we know what that looks like, we need that to come out. George, I've run out of time. Mate, thank you so much for joining us this morning. I love your work, love how you go about doing things. I think a lot of people have been really inspired this morning on your story and the tips that you've given them. Mate, thank you so much. And I really appreciate all you've done, buddy.
My absolute pleasure. You do so much for us mortgage brokers, mate, and we really thank you for everything you've always done for us and fighting the good fight for us, mate. So thank you for being our voice. And in terms of mortgage brokers out there, my phone is always on. If you ever want to ring me for some advice, I was probably in your shoes before, and I'm happy to show you what next steps, that could help you out. So my number is 0411 333369. Happy to help in any way.
I promise I won't write that back on the public toilet door. Mate, thank you again so much. Really appreciate your time. Quiet round of applause from everyone. You're a great man. I look forward to seeing you soon, buddy. I'll speak to you shortly. So thanks, George. It's great. Thanks, mate. All right, everyone. We may have a slight technical issue at the moment, but again, thanks so much to George. We appreciate his time and being able to share his thoughts with everyone today. Sorry I didn't get through all the questions. We will then add any questions we didn't get to today for next week. Remember, you'll be able to watch this on the FBAA's YouTube channel. They're all recorded. So all the past episodes of Q&A with Whitey are available there. This one will be up next week. And next week, get ready, our special guest next week is Tanya Saal, the CEO of Outsourced Financial Aggregator. We're going to drill the aggregator on their view of the world and what's happening in their space, and mix that conversation up a bit more. So thank you again. And of